Hi, this is Gerard Saviola. I'm a partner in the Clifford Chance Fund Formation Group, and I'm here at Super Return Emerging Markets in Geneva with Jim Strang. Jim is a managing director at Hamilton Lane, based in London, and we have been talking about emerging markets. And Jim, we've been chatting about the concept of emerging markets and how relevant that is as a concept, since it seems to cover a pretty wide variety of the globe.
Yeah.
What is your concept of emerging markets?
Well, I think it's a good point that they're all created somewhat differently. I think we look at it through the lens of, from the industry, just how much has actually happened. What is the accumulated experience in the specific country market, and that gives you a gauge for how emerging it is, if you like. And clearly, some markets are very, very early on in their development, and others are considerably further forward. So in some of the Asian markets, there's been relatively significant amounts of investments made and capital returned to investors, whereas somewhere, for example, in Africa, if you exclude South Africa, it's a different story. It's just a lot less has happened.
And we were trying to access these, we look at the growth potential in many of these emerging markets, which is very exciting. And there's a sense of excitement here at this conference, I think. When you're trying to access that for your investors, are you looking at global opportunities, regional opportunities? Are you looking at country-specific funds? How do you determine where you allocate your resources?
Well, we have a sort of broad agenda, so we'll look at pretty much anything. And then really it comes down to where the process tends to find interesting things to focus on. And that has historically been more down the road of country-based funds, and to use the sort of euphemism, country champions has really been the way we've gone. And I think it's because this is definitely a local business, and we've decided that we have more comfort at backing a local team where that wheel of experience has turned significantly and where there's a real demonstrable record of success, vis-a-vis some of the larger groups which have raised very significant pools of capital and are operating on a much broader basis.
And on that demonstrable record of success, we've talked also at this conference about exits and the timing of exits. In some emerging markets, I think Africa is a common example. We see really exciting deal flow opportunities, but less on the exit side. So
Yep.
how do you perform due diligence on those sorts of sponsors that look like they have a very exciting track record, but you've yet to see some of those realizations?
Well, I think it's the elephant in the room. Is even for the groups that are the most experienced and sophisticated, there's only a limited track record to go on. And I think our investment committee just tends to take a bit of a holistic view and say, all things equal, is there enough? And we know for a fact that there's not as much as we would like, but it's just at what point in the round do we get a sufficient comfort that we're willing to take this step forward. And I think we've generally been somewhat cautious, and that's actually served us quite well. So we haven't really taken big leaps of faith in the absence of the facts.
You described yourself as a cautious investor and a cautious advisor earlier as well. What about some of the risks that we all talk about in emerging markets, the political risks, the economic risks? How do you when you're underwriting an opportunity, how do you balance looking at the opportunity with looking at the risks as well?
Yeah, again, I think the good thing about the exogenous risks, if you like, is in most markets they're pretty clear. So we spent time in the last couple of years looking at investments in Turkey and looking at investments in Russia, and it is fairly evident the macro risk that you take. Sort of taking a pace back, we look at things really across 4 or 5 different dimensions. So from a country markets perspective, what is happening with the economy, which is fairly obvious. For private equity, what are the structural drivers? So what does M&A activity, exit activity look like? What is competitive intensity in the market? Certainly governance and the rule of law and how we see that operating. And for most of those emerging markets, that's sort of reasonably evident. The thing that actually, fundamentally when these things go awry, most of the time it's the team rather than the location, it's the people.
Than the specific risks. A lot of sponsors, I think, have talked about how a lot of the risks inherent in some of these markets are easily identifiable, easily sort of managed, not easily managed, but we can manage these risks, as opposed to the point you're making about oversaturation in some other markets when there's too much capital, the risk of competition driving up the costs of portfolio companies. Are you seeing some of the emerging markets where there really is a bit of saturation of capital, too much money at play, driving up some of the costs of underlying investments?
I think you definitely see that. I mean, we talked briefly that the LP community does have a bit of a track record of finding something that it likes and jumping on it very quickly. And the dynamics often are that there's that lets groups be established that maybe wouldn't be established in a more normalized environment, or existing groups raise a lot more money a lot quicker than they would really ideally want to. And if you basically the capability set for private equity is like an elastic band. You can stretch it as funds get bigger, but if you stretch it too far, it will snap. So and the problem with some of the markets when money flows in is that elastic gets stretched way too far and it's liable to snap. But I mean, that's just something you've got to live with, basically.
And so what's exciting you the most now? What regions, what geographies, what's on that sort of spectrum? What's at the right point to be investing in right now?
Well, I mean, I think we're on the lookout for opportunities in Asia. We think that's quite interesting. We've spent quite a lot of time in Latin America outside of Brazil, which is where that elastic might be quite stretchy. So we've certainly looked there, and we've also seen emergence of some interesting strategies which are maybe a bit dissimilar to the mainstream. So more distressed-based opportunities, which is really to some extent playing on the fact that there might have been too much money raised too quickly in certain markets, and that phenomena is now trying to fix itself. And there's actually an opportunity to get involved there. So we've seen one or two interesting things in that. We've invested in one recently, and we're looking at something else right now, and that's sort of front of mind at the moment.
Excellent. Well, thank you very much.
All right, thank you. Pleasure.
Good seeing you.
Take care.